You're thinking of moving to Central Texas, but you don't know what the market's like down here and you have tons of questions. This video is probably for you because I have Mark Hairston with Texas Mortgage Source, and we're gonna sit down and we're gonna kind of talk about from the real estate standpoint of what the market looks like, and then from the mortgage side as well. If this is your first time to the channel and you like this type of content, show me some love. Hit that subscribe button down below. And then of course, if you hit that bell icon, you'll be the first one notified every time I drop a video, which should be every week. My name's Matt Dick. I've lived in Central Texas for over 12 years, and my team and I absolutely love helping people move to the Central Texas area or move out of the Central Texas area. So whether that's in 9 days or 90 days, feel free to reach out. All of our contact info should be down below in the description or right here at the bottom of the screen. So what are we waiting for? Let's go sit down with Mark and get this show on the road. Okay, so I'm here with Mark Hairston with Texas Mortgage Source out of Austin?
Yep.
Out of Austin. Okay, so the way we're gonna do this is I'm gonna go over the real estate side of things, and then we're gonna punch over to him on the mortgage side of things. Now, today is September 17th, 2025, so this information could be good for maybe another week or until next month, who knows? But hopefully you find some good knowledge out of this. So on the real estate side of things, for 2025, home sales are up 4.3%. The median sales price is about $335,000 here for Central Texas. Or I should say Central Texas, maybe like Bell County, Coryell, maybe McLennan. I doubt Travis and Williamson's probably a little bit
higher than that, yeah. Probably, yeah.
And then, but the average sale price for our area is about $424,000. And then the average days on market are about 63. Again, today's September 17th, so it's subject to change a week, a month. You never know with real estate. And then we're about at a 5.6 worth of months of inventory. And basically that just means we have just a little over 5.5 months worth of inventory in the area. So on the real estate side, it's pretty clean cut. What do you got for us, Mark?
Well, Matt, it's great to be here. I really appreciate the invitation to be here.
Well, I appreciate you coming.
Yeah, it's an honor. It's an honor to be here in Temple, Texas. I live in Austin, have for a long time. I was born and raised in the Houston area. You know, I've been in Texas my whole life, but I came to UT in '77 and been in the Austin area since for 48 years now. Okay. And been doing home loans for 40 years, since 1985.
Okay.
So I've been a mortgage broker for a long time, which means I'm independent of any company. I don't work for one company or one bank. I work for myself and the borrower to get them the best deal. Okay. So that's what I've been specializing in that for a long time. You know, the timing of this video is interesting too, because today is the September meeting of the Federal Reserve.
Oh, okay.
Yeah, which means that they will decide this afternoon on the direction of interest rates.
All right.
Okay. People do expect to see rates coming down, and I've been thinking that for a while, and we've seen a huge fluctuation in the last several years since COVID, as we all know.
Yep.
And rates have been as high as 7.5. They're floating down in the mid 6s right now, and we hope to be down in the 5s sometime this year or early next year. So that's kind of an update on rates, and we'll know more this afternoon by the time this video is posted for sure.
Okay.
You know, but Austin is a little bit different. Like I said, I've been there a long time. I wouldn't call it a recession, but we've been in a correction for several years now. Yeah. You know, and I don't sell real estate, but I work in the real estate community a lot with agents, and we have a huge amount of inventory. Prices are down from their highs, probably 20% across the board. You know, I own several homes up in Austin, so I'm feeling that pain myself, you know.
Yeah.
And even rents are down a little bit,
yeah.
You know. But overall, it's a pretty good economy still in Texas.
I think so too.
Yeah.
Now, what's the difference between a traditional lender and a mortgage broker?
Okay, great question. It's a question so good that I actually wrote a consumer guide called The Truth in Lending, where I teach people that subject.
Okay.
There's basically three channels of loans in the residential world. There's commercial banks like your Bank of America, Chase, credit unions like University Credit Union is big in Austin.
Yeah.
That would be one channel. What we call depositories. They have their own money. The second channel would be companies like big mortgage bankers, what they call mortgage bankers. Even though they're not banks, you don't deposit money with them. All they do is home loans.
Yeah.
But there's companies like Supreme Lending or Fairway Mortgage and some of the big ones.
Yep.
And then The third category is the smallest channel of loans. It's called mortgage brokering. And you have to have a lot of experience usually to get approved as a mortgage broker because it's because of regulations, number one. But I don't work for one institution. So in other words, I work for the borrower. I have about 20 different lenders around the country that I can sell loans to.
Okay.
So I package up I profile the client based on income and credit and down payment. And it could be a VA, it could be a veteran, or it could be a high-end conventional loan, or it could be a first-time buyer FHA. And we try to design the mortgage product which best serves the borrower. Okay. And typically speaking, and almost across the board, I can usually offer a better rate than most companies. Because I'm independent, my profit margins are thin, so I can offer a better deal and pass that on to the borrower.
Okay.
Yeah.
Okay. Typically, would you say whether it's if we're looking at a mortgage broker versus a mortgage banker, do you feel like you'd be able to get the better interest rate or the better deal for the client?
Typically. Almost across the board. Now, on occasion, on the high-end loans, if you have a bunch of money, let's say with Chase Manhattan Bank, and you need a mortgage over $1 million, a lot of times they're going to cater to those high-end people because they want to keep their money with the bank. So they may offer a better deal than I could. But typically, our sweet spot is anywhere between, let's say, a couple $100,000 and $800,000 is our sweet spot. If you get over $1 million, a lot of times the banks will offer a better deal.
Are you aware of what the current rates are for like an FHA or VA or conventional going right now?
I sure am. I locked an FHA loan yesterday at 5 7/8.
Oh, nice. That's a lot better than last month. When it was
it is. It really is. Last month we were probably 6.5.
Yeah.
Or maybe around 6.5 a couple of months ago.
Okay.
So the market has definitely improved, and I locked a conventional loan yesterday at 6.25.
Okay.
And that's what we call a par rate, which means there's no cost to that loan. There's closing costs, but there's no fees to get that particular rate.
Okay.
And you can, what they call, discount it or buy down that rate from there.
Okay.
But most people don't want to spend the extra money, or the seller sometimes will participate in helping people get a lower rate by offering a buy down. Okay. So a very popular platform around that has, at least in the last couple of years, has been what they call a temporary buy down. Where let's say FHA, let's just say 6%, and the seller will pay the buyer for the buyer's incentive to buy their home to buy down the rate to 4% the first year, 5% the second year, and 6% thereon. Which could save several hundred thousand, several $100 a month. Typically, and that's based kind of on Austin prices. We're a little bit higher than Temple, but not a whole lot.
Do you do the VA IRRRL? How does that process work for a veteran?
Great question. A VA IRRRL is an advantage for a veteran because it's called a streamlined refinance. Now you're in what I'd call, I guess a lot of your clients are veterans. Being up here in the Bell County. So my experience over 40 years, and I've done hundreds and hundreds of VA loans, even though I'm not a veteran myself. It's always, and I've never seen it otherwise, where it's the best product for the veteran to have. There's a lot of advantages to VA loans. 0 down, no monthly mortgage insurance, easier qualifying, blah, blah, blah. And an IRRRL is a simplified or streamlined process in order to refinance that loan to a lower rate if rates come down. And I'm working on one right now for a borrower who was at 7.25 about last year. This time last year. Rates are down about 1% from last year. Now, hopefully it'll come down more. And we're streamlining into around 5 7/8
awesome.
With no qualifying.
So what, do they just need to reach out to you and say, hey, I want to look at the VA Streamline refinancing?
Absolutely. Absolutely. Because most people, let's say probably more so in 23 and maybe through 24, but in the last couple of years, rates were as high as 7.5%. So if you got in the fall of last year or this year before, for sure, if you're in the 7s, it maybe start time to think about it. It used to be in the old days when rates were a lot lower. When I got in the mortgage business in 1985, our average loan amount was only $70,000.
Yeah.
You know, you didn't borrow a lot. So you had to really get a break in interest rates in order to refinance to make it worth your while.
Yeah.
Nowadays, our average loan amount is closer to $400,000. Yep. Okay, so 1% or 1.25% off what you currently have could make a world of difference.
$1,000+ I feel like maybe more, maybe less.
Yeah, it's something like that, depending on how much you're going to be borrowing. You know, but and the IRRRL is a great program because there is no qualifying. You don't have to go back and do all the hoopla of getting a mortgage like you would have conventional.
Okay. So there's no like appraisal, no none of that.
You're right.
Pulling credit or any of that.
Pretty
stuff.
streamlined.
Oh.
Yeah, it's a great program for veterans.
Is there anything that they have to have? If I remember correctly, like they have to have like no missed payments over the past like 8 or 9 months.
It's usually a year.
A year.
They want a clean record of 1 year.
Of 1 year, and then at that point, do they have to bring any money to the table?
Nope.
Or no money to the table?
I assume you have a VA loan.
I do have a VA loan. That's 6.7.
Okay. Well, I'm very fortunate. 2 of my homes are financed under 3%.
Yeah.
Because I bought at the right time, you know, and then one's at 4.5. So I'm pretty good on my properties, but there's a lot of people who bought in the last couple of years that are, you know, probably should be thinking about it, at least watching things. And that's why this Fed meeting is so important, because I think this is going to give the indicator of the near future, meaning I think the next 6 months we should be in the 5s is my guess.
Okay.
You know, as far as long-term fixed rate loans.
5. Okay. I hope that's the truth.
I hope it's the truth too.
Yeah.
Don't quote me or don't, you know, I'm not
you heard it here first.
Yeah, right.
5% in 6 months.
Yeah, right. You do not promise that, but that seems to be the trend at least.
Yeah.
You know.
Because it seemed like we dipped down into the high 5s earlier this year, and then it shot back up, and then it started trickling.
It was really down. About a year ago now.
Was it?
Just a brief period of time.
It just,
like
it was last year.
September, and for about a week, we had some rates around 6%. Then almost immediately they went to 7.
I want to say, because last October, because of the September month, I think I closed like 11 transactions in the month of October because of the rates.
Yeah. People start coming out of the woodwork. You know?
Yeah.
And I think, and I have friends all over the country in the mortgage space and real estate too, but mainly mortgage because I'm well connected to a lot of networks. But it's shocking sometimes how different markets are still strong and others are soft. You know? You know, Austin is an example. I can speak to that because I've been there so long. We had a huge run-up in appreciation during COVID.
Yeah.
You know, so many people relocated in here,
in
Central Texas, Belton, all the way to Waco, probably even to Dallas for sure.
Yeah.
And we've seen a softening of that simply because people don't move around like they used to.
Yeah.
You know, the economy's still pretty good, but it's not great.
Yeah.
You know, so the Federal Reserve is always stimulated to lower rates when inflation comes down for one, which it already probably has. We're down around 2.5% inflation versus 9% when Biden was there about a year ago. Okay. So inflation's down. That gives the Fed confidence that maybe we're not overheated in the economy, which we certainly aren't, even around the country. There's pockets that are doing very well. And so I think that's going to help us with interest rates in the next, 6 months or so.
Okay.
Yeah.
Oh, yeah.
Fundamentals of qualifying for a mortgage are pretty much the same. We'd like to see everything we do is a 2-year look back.
Yeah.
We like to see a consistent job history over the last couple of years, especially if you've been self-employed. Like I'm self-employed, you're self-employed. So when we go out and get a mortgage, we have to prove a little bit more than most people who are on a W-2.
Yeah.
Okay. But we verify income, and then we're going to look at your credit scores. And there's different types of loan. Like VA is going to be more lenient on credit than conventional. Okay. And VA is going to offer a much better interest rate than a conventional loan.
Yeah.
Or even FHA. And then we look at down payment. Of course, a veteran doesn't usually have to put down any money. And there's another myth around VA that I just want to share. I'm sure you know this, but you can have more than one VA loan at a time. Yep. People think that you can only have one. I said no.
Now, in what scenario would a veteran using their VA home loan for a second time require them to put money down?
Well, it boils down to how much eligibility used. You have a certain amount of eligibility as a veteran under the zero down program.
Yeah.
And once you use a certain percent of that, you still have some remaining that you can use, but you may have to put down a small percent after that.
Okay. Is there a way for them to go and figure what that would look like on their own, or should they reach out to you or another lender to figure
I would say reach out to a lender.
Okay.
Okay, because we have the tools behind the scenes. They could probably contact a VA on their own too.
Yeah.
I don't know, to be honest with you, how that would work, but I know we can find out very quickly.
Okay.
They would give us their current DD-214 certificate of eligibility, and then we can get that done.
Okay.
It's very automated.
Yeah.
You know, in the old days it was slow process. That's another myth. We can close a VA loan typically within 3 weeks.
Okay.
You know, it's not 4, 5, 6 weeks out.
Yeah, I think the fastest I've ever had one closed was around that 20-day mark.
Yeah.
And that was just because they had everything in, and
it's underwritten very quickly. You know, one thing about a broker, like I mentioned, I have lots of different what we call conduits or lenders out there.
Yeah.
It's called the wholesale channel, which means our rates are usually be better. You can't go to the companies I use to get a mortgage. They wouldn't go to. You can't work as a from the public to use the companies I do. Okay. I only work through brokers like me.
Okay.
Okay. And the reason I do that, one of the main reasons, is to offer typically a better deal, but also that each lender has what I call a certain appetite for the kind of loan they want. Like certain lenders want VA, so they're going to really focus on that market.
Yeah.
So they're going to really cater to veterans. Some lenders want low score FHA loans. Okay, because they can usually charge a little premium for those.
Okay.
Okay, your rate may not be as good as it would be if you have a 620 score if your score is 580. Okay, so sometimes there's going to be an adjustment of interest rate. And the same thing with conventional. Some of my lenders want the what I call A paper, good credit scores, 20% down folks. You know, they feel more secure in that. Some lenders want just the investor mortgages. Okay, people buying rental properties. So depending on the profile of the borrower is where I take the deal.
Okay.
Yeah.
That makes sense. So you have that relationship, and you can kind of push the packet to where you think the consumer is going to get the best deal.
Absolutely.
I love it.
And the other thing that to keep in mind working with a broker is I have a lot of flexibility. So if I lock a loan in and rates were to come down during the process, I can always switch lenders and go somewhere else with it.
Okay.
To get a better deal.
Versus just being stuck with one lender.
Yeah, well, exactly.
Okay.
So I can move things down, or if one lender denies a loan, I've got a lot of other opportunities to place that loan somewhere else.
Okay.
Okay. So that's kind of how my business works. And I'm very hands-on. In other words, I don't have a big team. I keep my overhead very low. The reason rates are higher than a lot of other institutions is because they have a lot of overhead. They have big offices and a lot of personnel and staff. I have me.
Yeah.
The way one gets paid.
Yeah. That makes sense. That makes perfect sense.
Yeah.
Okay.
So I'm very hands-on when you work with my company or you work with me.
Okay.
Yeah. I have an assistant to help me with the paperwork.
Of course.
But I don't have other staff.
Okay.
Nobody's on payroll with me. They're my wife.
Yeah. Hey.
Got to keep her happy.
Exactly. Okay.
I do have a weekly radio spot I can mention too.
Yeah, throw that on there.
Yeah. On Saturdays I do a recorded show during the week, and it's a talk show radio station out of Austin called The Bridge. I'm not sure what their reach is.
Yeah.
But I do it's called Mortgage Talk with Mark.
Okay.
And I usually bring on guests like you having me on, and maybe I'll have you on to come down to Austin and talk about your world. You know, that'd be fun.
Yeah.
And it records back on Saturdays at 12:30. They have an AM feed and an FM feed.
Okay.
And it's a 30-minute show. It's a talk show. It's kind of fun, and we have guests on about different things around real estate in general. Could be an attorney talking about estate planning, or how to build a trust and how to put property in trust. Or we've had some realtors on there, home builders, contractors, roofers, movers, whoever. You know, give the audience a little more information about how to make good decisions around buying homes.
Yeah.
Because there's a lot to it.
There's so much to it.
There's a lot to it, from the real estate perspective to the mortgage side to understanding title to working with home insurance people, good people for home insurance. There's lots of hands in the pie, if you will. Yeah. And it can be an intimidating process. So you really want to build a good team like using Matt here for real estate.
Yeah. Or Mark for lending.
Come on. But you want to find experience, you want to find knowledge, you want to find people who have strong referral, testimonials and reviews. Okay. To make sure that you're with the right team, because there's a lot of money on the table.
There is.
For most people, and I start my little white paper. I wrote a consumer guide called The Truth in Lending. I'll also send out if somebody wants it.
Okay.
Okay. And I teach people how to shop for the mortgages, kind of over this conversation in writing.
Okay.
Okay. And the first line of my report says that something like that real estate is the biggest investment most people ever make.
Yep.
You know, generally speaking. Not everybody, but most people, including myself.
Yeah.
Most of my assets and my personal net worth is in real estate, personally. So that's the truth for a lot of people. So you want to make good decisions.
Yeah.
Amen?
Amen. Well, I think that's going to wrap this up, guys. Again, if this is your first time to the channel and you like this type of content or the other type of content I do, hit that subscribe button, hit the bell icon so you're the first one notified. And then, of course, if you're looking to buy a home or sell a home in Central Texas, feel free to reach out. Our contact information should be down below in the description or somewhere like right here on the screen. Until next time, be safe. It's kind of crazy out there.
Whew.